From EIN to funding, here is how to get business credit without using your social security number for qualification. I mean, this is the key. This is the formula to be able to get business credit where you don't need to provide a personal guarantee and do not need to provide a personal credit check. Keep in mind, when we talk about getting credit that's linked to your EIN and not your social, that's what we mean. What we mean is that you're able to actually come in and be able to get credit without attaching a personal guarantee, meaning you're not liable for your business debt, and without attaching a personal credit check, which means your approval is not based on personal credit quality. That helps you two different ways. First of all, if you have good personal credit, well, you don't have those unnecessary inquiries on your credit report that will prevent you from getting other kinds of funding. And if you have damaged personal credit, well, you don't want your business credit approvals to be based on bad personal credit. So you don't have that be the scenario if you are actually coming in and building business credit, because we're not even looking at your personal credit quality. So today I want to map out this exact formula. Look, there's a lot of talk on social media channels nowadays from people that maybe did have some success doing it themselves, or others that are just completely blatantly making things up. But this is the formula that we've used to now help over 60,000 plus clients actually successfully build business credit for their EIN that's not linked to their social. So why the heck does it even matter? Why do you even need to do this? Why do you even want business credit? Well, first of all, business credit is the only way that your business can actually fund itself. So a lot of people ask me, and I just had this conversation this weekend when I was hanging out with a friend. He said, hey, I want to get $500,000, but I want to get it without a personal guarantee. How do I do it? And I said, well, that's nearly impossible if you don't have business credit established or some kind of collateral, because otherwise you're going to be asked for a guarantee because your business hasn't proven itself. So this is one of the importance of business credit. We need the business to show that it has the ability to pay its own debts. If we want to get away from credit checks, if we want to get away from guarantees, if we want the business legitimately to be able to fund itself, meaning that the business can go out and get its own funding without us constantly needing to back the business, then the business needs to prove itself. And that's one of the benefits of business credit, is that we're building a credit profile, a credit score for the business, so the business can basically prove itself. So the business can show lenders and credit issuers that it can pay its bills. And the more history we build for the business, and the more we show lenders and credit issuers that the business can stand on its own, the less and less and less that our guarantee is needed, the less our credit check is needed as well. So business credit's important because it legitimately gives your business the ability to fund itself. And by the way, if you're just coming in, give me your company name in the chat, and I'm going to give you a shout out on the live stream. Like thousands and thousands of people will see this because it's kind of like a free advertising for you. So give me a shout out in the chat, give me your company name. So we need to make sure that we're building business credit so our business can fund itself. We also need to build business credit because lenders are looking at it for three reasons. One, lenders and credit issuers are looking at it to make the decision of whether or not they should approve you or not. I was talking with a good friend of mine that does credit card stacking, one of the biggest in the space. And he said, you know, Ty, nowadays, it's almost impossible to even start getting some of these credit cards for your business if you don't have some kind of established business credit. And we're starting to see this transition. I was talking to another one of my buddies that does revenue lending. He said the same thing. Another one of my friends that does equipment lending. He said the same thing. So we're coming into this world, and I was even looking at IP-backed loans. I mean, loans that are based on you having some kind of intellectual property. And even then, said the requirement said exactly the same thing. You need to have some kind of established business credit to be considered. So we're coming into this transitional period in lending where more and more and more, even to get alternative fintech type financing, we have to have business credit established. If we don't have some kind of business credit established, we're starting to see more and more denials from on deck from all these other fintech alternative lenders. So lenders are using business credit to determine if you should be approved or denied. The second thing they're using business credit for is determine the amount of money you should actually be lent. Don't forget, the business credit reporting agencies actually say how much money credit issuers should give you in funding. So the more accounts you add to your business credit report, the higher the recommendations of credit are. So that means the more you build your business credit, the higher the approval amounts you're going to get. And thirdly, business credit determines the terms you will pay. It determines how long you'll have to pay back the debt. It determines the interest that you're going to pay on the debt as well. So let me give you an example. The last loan that we secured was $500,000. Our interest rate was 4%. And we got a term of 30 years. So our payment was only $2,400 for a $500,000 loan. Now, keep in mind, when we got our very first loan, when we didn't have business credit, we paid over $9,000 a month for $75,000 loan. So this is why business credit's important, because it gets us more approvals, it gets us higher approval amounts, and it gets us better terms as well. And by the way, TCB is in the house from 3D Business Inc. Thanks for coming in and saying hello. And Agil, it's good seeing you back in here. Hello, Coach Ty. Good afternoon. Don Cleaners LLC from Providence, Rhode Island in the building. Thank you for coming in and saying hello. And La Briche is in the house. Jamrock Logistics and Freight Forwarding. Thanks for coming in. Thanks for saying hi. So we need to build business credit for this reason as well. Plus, we also need to build business credit because it's what gets us away from personal guarantees. It's what gets us away from personal credit checks. It is publicly accessible, so it's also our reputation. Okay, we've got trucking clients, and this actually came to mind because we were talking about La Briche being in logistics. We have trucking clients that get more contracts when they build business credit because they didn't know that the people that are bidding or they actually putting the contracts out there for bid are looking at business credit to make the approval decision. So you're getting more clients with business credit. You're getting more financing, more credit. You're getting better terms on insurance. All these things are tied to business credit. These are all the reasons that we want to build business credit. So how do we do it the right way without using our social? Well, first of all, I'm not going to harp on this to spend a lot of time here. But the very first thing that we want to do is we want to build a legitimate, credible business, okay? We want to build a business that's lendable. If we want business lenders to lend to us, we need to have a lendable business. So what are lenders looking at? They're really just looking for credibility. That's the main thing they're looking for. They want to see that we do have an entity set up, preferably a corporation or LLC. The type of corporation doesn't really matter. They want to see that we do have an EIN. A lot of people think that business credit's linked to your DUNS number. That's not true. Your business credit is linked to your EIN. So you have to have an EIN to even be able to establish business credit. So we've got to have that. We want to have a separate address for our business. We don't want it to be a home address. We don't want it to be a PO box or a UPS or a post box or postal box that we get from post.net or something like that. We want to have like a real location, maybe a real retail, real commercial location, even a virtual address. Those are virtual office, I should say. Regis, Alliance, Da Vinci if issue those. But we want the address to be separate from us. We want the phone number to be separate from us. We want a separate phone number for our business. We want it to be toll-free. We also want to get a business license. We can do that by just searching our county business license in Google. Hey, Hillsborough County business license. I can typically get one in Florida for like less than $100, like $75. Goes a long way to give us credibility. We want a separate bank account set up for our business. Now, the business credit issuers aren't going to look at your bank account, but they're oftentimes going to ask you for a bank reference. So we want to make sure that we have that done. We want to have a professional email address. We do not want partydude2025@yahoo.com, right? We want it to be, mine is info@creditsuite.com. My domain is creditsuite.com, right? So we want those two things to be congruent. We want a website that reflects that we're professional as well. But most important above all else, the most important aspect of actually making sure our business is set up where it's lendable is that we need to make sure that all of this information is congruent everywhere it's listed online. Look, the number one reason that we get denied for credit financing is because the lenders and credit issuers think the application is fraud. They're looking at our application, they're trying to find our business online and validate it, and they go to Secretary of State, they go to our website, they go to our Google business profile, they go to other places our business is listed, and the information doesn't match. So what happens is the lender's computers are throwing up alerts saying, hey, this is potential fraud. We can't validate the business even exists because the information entered on the application doesn't match the other places we're seeing the business online. So we need to make sure that the business is congruent. If we've done these things, then we've set up a lendable business. And this is very important when we're building business credit, because when we're starting a credit profile from scratch, we're not giving them anything to look at. And the next step, I'm going to tell you how to get vendors that don't require a guarantee or a credit check. So if we're going to start getting approved for credit that doesn't require a personal guarantee, it doesn't require a personal credit check, we don't have to verify revenue. They don't have anything else to go by other than the credibility of our business. So when we're starting to build business credit, setting up this foundation is absolutely essential because it's the only thing these credit issuers have to look at. If we don't do this right, here's what happens. The credit issuer asks for large deposits. The credit issuer won't approve us for an account unless we buy a certain amount of items. The credit issuer won't approve us unless we buy items from them for 3 months. All these things slow us down And the way to get approved for real starter vendor credit right away is set up a credible business. When we check all these boxes, we get approved without issues. If you start to have those issues, you didn't set up your business where it's actually lendable, right? That's it. You don't have a credible business. So a lot of people ask me this question, hey, why do I have to buy from this place for 3 months? Why do I have to have a deposit? Well, that's why, because you skipped this step. You have to set up that business where it is lendable. And by the way, Tuffy Brown is in the house from Facebook, in from Portland, Oregon. Thanks for coming in and saying hello. So that's step number one. We've got to set up a credible business. We've got to set up a lendable business. We have to make sure that our business is set up properly. Now, number two, we want to do a free business credit check just to see if we have any business credit now. There's an easy way to do this. You're going to want to write this down really quick, or you're going to want to type this somewhere right now. Get ready. It's fundabilityscan.com. Fundabilityscan.com, 100% free. And by going to fundabilityscan.com, you actually can scan your business right now for free to see what credit issuer red flags you're going to have. Like if you want to see the red flags you're going to have right now with your lendability, go there. If you go to fundabilityscan.com, it actually pulls from one or more business credit reporting agencies and tells you if you have business credit established right now. It's the only place on the planet that for free you can find out if you have business credit reports established at no cost. So go to fundabilityscan.com. It's going to exit and tell you all the things you're good on. With your lendability, it's going to tell you all the red flags you have as well. And it's all right there at fundabilityscan.com. So now we need to actually do that check to see, do we have anything set up with the business credit reporting agencies? Now, maybe you don't want to do that check. That's fine too. You can go to nav.com to get business credit reports. You can go to creditsuite.com/monitoring to get to nav. You can go to DMB, Equifax, and Experian to get your reports for like hundreds of dollars. Any of those options will work. But the goal in this step is to see, do we have any established business credit or not? We need to know that because if we have negative business credit, we need to start disputing it right here in this step. But we're not going to know for sure unless we actually do a check. And again, the nice thing about this is that a lot of times people come to me and think they have bad business credit, but they have none. The reason that their scores are low is because they have no business credit. So keep that in mind. Now, also another way, if you want 100, if you think you do have business credit established, and by the way, here's that fundability scan. You can scan this QR or go to fundabilityscan.com. If you think that you do have business credit established now, then go to this link, creditsuite.com/console, or scan this QR code. Because we are teamed up with Dun & Bradstreet, this is the only way you'll get a 100% for free business credit report from D&B. You get your actual report, you get your scores, including Paydex score, on that report 100% for free. Now, of course, we actually get a certain amount. We pay for what we actually have, but we're giving them to you 100% for free. So if you want a free copy of your D&B report, go there. If you're not sure that you have business credit, go to fundabilityscan.com. It's a free way to take a look and see if you have business credit reports established now. So now we've set up a credible business. Then we came in and we checked our business credit reports. The next step we want to take is we want to set up initial business credit. There's 3 ways for us to do it. The number one way for us to do it is we use our good personal credit to get credit cards through credit card stacking that report to the business credit reporting agencies. Now, we call this program Credit Line Hybrid, even though they are really credit cards. And we call it that because it's a hybrid of credit cards because you get 0% and credit lines where you could take the cash out. You combine the two and you're getting cash out on these at 0%. And the nice thing is that a lot of these can report to the business credit reporting agencies. So you can get 3 to 5 high limit trade lines to start building business credit. And the nice thing there is that the higher the limits are on your credit report, the higher your future limits will get. So if I start building my business credit report with $10,000 limit accounts, then when I go to get my Apple credit card, I'm probably going to get $10,000, $15,000 limits. So this is a really good way to jumpstart business credit building, but there is a catch. The catch is you need to have good credit scores. You need to have about a 700 FICO score with this program, or a guarantor that has that, a family member, a friend, an investor, a partner. 50% of our clients that get this program are using somebody else's credit to qualify. So it could be you or a guarantor. Either way, this can actually get you approved for high limit accounts that report to the business credit reporting agencies. And that's a good way to start building business credit. Method number 2 of 3 is that you can use what are called starter vendors. Now, starter vendors are very unique because starter vendors do two things. One, these credit issuers will give you credit when you actually have none. So even though you have no credit, you're able to use this to actually get approved for credit. Okay. The second thing is they get the credit that they give you, they report it to a business credit reporting agency. Here's why that's a big deal. Over 90%, 9 out of 10 accounts that will issue you credit, vendors who will give you credit, they do not report the credit to a business credit reporting agency. So we have to be very intentional to find credit of issuers that will give us credit when we have none and report it to a business credit reporting agency. And that's what true starter vendors will do. Now, some of my favorites include Uline, Granger, Office Garner, CEO Creative. Those are 4 of my absolute favorites. They'll give you credit when you have none. If you set up all those lendability points that we talked about, well, then your business is going to set up to be able to get approved for those kind of accounts. Now, you're going to want to get about 3 to 5 of these type of accounts on your credit report, whether you use Credit Line Hybrid, good credit to get those high limit accounts we just talked about, or you use starter vendors. Either way, you want to have 3 to 5 accounts. Now, that brings me to number 3 method of building initial business credit. And this is something from Dun & Bradstreet called Credit Insights Plus. Now, Credit Insights Plus gives you the ability to monitor your business credit reports with Dun & Bradstreet, but it also gives you the ability to actually add accounts you already have, trade payments you already have, like term payments you're already paying. You can actually have those added to your Dun & Bradstreet credit reports. Now, this is really beneficial because if I'm paying, well, I deal with HubSpot, right? HubSpot is our CRM. So I can take my HubSpot payments, which are like substantial, like I don't know, tens of thousands of dollars a month, and I can get that to D&B and have D&B add that as an account, for example. So again, all these term payments you're paying, software, and all these other monthly expenses you're paying, where the vendors are not reporting the credit to Dun & Bradstreet or Equifax or Experian, you can add these accounts to your D&B report, and that's another way to add initial accounts to your business credit report. So don't forget, even if you do Credit Insights Plus, you still want to do something to add some accounts to Equifax or Experian. We don't ever want to just build credit with one profile. That's as problematic as us only ever building credit with one consumer reporting agency, okay? And by the way, Tame Tiger is in the house. Thank you very much for coming in and saying hello. If you're just coming in, give me your company name, and I'm going to give you a shout out on the live stream and give you a bunch of free exposure. I mean, you can't beat that, right? Like, I'm going to promote you at no cost. Pretty cool. Okay, so it doesn't matter which way you choose. You need to get accounts in step 3 that report to the business credit reporting agency. We want at least 3, preferably 5 accounts on that initial business credit report and score. Credit Line Hybrid, 1, we can get it by going to creditsuite.com/CLH. Number 2, we use those starter vendors, right? I talked about those, CEO Creative, Granger, Uline, Office Garner. Those are some ones to get you started. Number 3, we use Credit Insights Plus from Dun & Bradstreet to add accounts we already have that are already term payments to our credit reports with D&B. Now, the next step we have is we need to start monitoring our business credit reports and scores. Now, if you're our client at Credit Suite, it's the only place you get real lender credit reports. I mean, the lenders get them and we get them. There's only 2 sources that get them, right? So lender credit reports will actually help you to actually see what lenders see. Now, you can also go to creditsuite.com/monitoring, and that's one of the only places you can get a tri-merge with all 3 reports on it as well. D&B, Equifax, and Experian, and it's super cheap to get. It's like $69 a month. Now, the third way to monitor your business credit is go to D&B, Equifax, and Experian Direct. I do not recommend this because it's expensive. It's like $250 a month to get D&B, Equifax, and Experian credit reports all directly from the bureaus themselves. If you're going to get any of them, you want to probably get D&B as part of that D&B Insights Plus. But the other methods will help you because you're actually getting all 3 reports. However you do it, it does not matter. I've given you 3 options, but you need to monitor your business credit reports, and here's why. Business credit building is based on a tiering system. Now, Credit Suite invented the tiering system a decade plus ago, and here's how it works. Based on how many accounts you have on your business credit reports, when you move to another tier, it opens up a bunch more approvals. So what I mean by that is that you might not have any credit now. Then you go get these starter vendors that we talked about. Now you have 5 accounts. Well, the minute you have those 5 accounts of your business credit report, that opens up tier 2 vendors. And those are all the vendors who will approve you when you have 5 accounts on your business credit reports. Then you add 3 more and you have 8 accounts on your business credit reports. Then you move to tier 3 vendors, and those are all vendors that will report you when you have 8 accounts. So an example of how this works is Lowe's might approve you if you have 5 accounts in your business credit reports, but Home Depot may require 7. So if I go to Home Depot and I only have 5 accounts, I would get denied. But if I went to Lowe's, I would get approved. That's why tiering is so important, because what's happening is the more accounts we add to our business credit reports, the more tiers of credit become available. That's why we need to monitor our business credit reports in this stage, because we can't get away from starter vendors and get to tier 2 vendors unless we actually have 3 to 5 accounts on our business credit reports. The only way we know for sure that we have 3 to 5 accounts is to monitor our business credit reports and see that those accounts are added. So in this stage, what we're doing in step 3, or step 4, I should say, is we're actually monitoring our business credit reports. We're seeing those starter vendors that we got now actually reporting on our business credit reports. And that moves us to step 5. And in step 5, and by the way, Tuffy is in the house again saying my business name is Rescue Me Inc. I love that, Tuffy. Thanks for saying hello. So make sure you check it out. Check out Rescue Me Inc. online. Tuffy's doing some cool stuff. Okay, so the next step is we're going to start getting real credit. Now, this is typically going to start in the net 30 type of accounts. Sometimes they're net 15, net 20, net 30, net 60, net 45. It gives you 15, 30, 20, 60 days to actually pay that bill. As we add a few more accounts to our business credit reports, we'll start to get to revolving credit with almost every major vendor. Now, in this step, we're starting to get credit with what are called vendors. What is a vendor? A vendor is a credit issuer that will extend you credit to buy their products and services only. Let me give you an example. Sam's Club has 2 types of business credit cards. They have their Sam's Club vendor account, which means you can only use it in Sam's Club. Like I can buy stuff in Sam's Club with this account. But they also have a MasterCard. And a MasterCard is called Universal Credit. And that Sam's Club MasterCard, I can go over and I can use it at Costco, right? I can use my MasterCard anywhere MasterCard's accepted. So I could take that Sam's Club MasterCard and I can use it at Costco, but I can't use my Sam's Club vendor account at anywhere other than Sam's Club. So when we think about vendors, we basically think about retailers, right? And this is why I call it the retail credit tiers, because in this stage, we're getting credit with like every major retailer you could even think about. So we talk about the ones that we all know: Home Depot, Lowe's, Staples, Office Depot, Sam's Club, Costco, Apple, HP, Dell, Best Buy, right? Then we think about ones that we might not even think about because they're specific to an industry: floors and decor. Do I care about floors and decor? No, I'm not buying or doing anything with floors in my business. But if you are a general contractor, if you're in flooring, well, floors and decor might be the one major account that you use, right? I can get credit at John Deere. Do I care? Nope. Used to care. Okay. Well, when I was from Indiana, I'm from Indiana. My dad had a John Deere. He used to tell us when there was a tornado that we were supposed to go to our shed and throw our bodies over his John Deere tractor. True story. Can't even make this stuff up. It's how we roll in Indiana. But I don't need John Deere in my life right now. I don't need to get a credit line at John Deere, right? But if you are in an industry that deals with that kind of equipment, let's just say, for example, that you own a lawn care business. Are you freaking kidding me? $30,000, $50,000 at John Deere is the difference between you having 1 crew mowing lawns and 10 crews mowing lawns. This one account at John Deere can take you from a low 6-figure business to a multi 7-figure business because of one credit line. So when we talk about vendors, we're talking about Macy's and Nordstrom and all the vendors we know and love. But we're also talking about these industry-specific accounts that in our industry could be a game changer if we could get it. One of our clients, Christine, got $300,000 credit line at the main vendor that she used. It was a game changer. She 50x'd her business with that one account because the one account bought everything she needed to grow and expand. So vendors are people that will issue, or companies that will issue credit to buy their products and services. We want to think about all the retailers we know and love, and we want to think about retailers that we probably are very specific to our industry. Maybe they're in our hometown. I have a building supply store in my hometown. It actually is now in the supermarket that I used to work at as a kid in the produce department. I love that job. I go on and on about it. I love produce department. Now it's a lumber store. But if I'm a construction company, if I'm a general contractor in my small town of Elwood, Indiana, if I'm there, a line of credit there could be a game changer, right? So when we think about vendor credit, we think about major retailers. We think about retailers that sell the kind of stuff that we need in our industry. We also think about people in our town, in our community, in our immediate circle that sell the stuff that we need. Okay, that's what vendors will do, is they will give us this credit that we actually need to be able to actually buy the things we need to be able to buy for our business. Now, so that's what retail credit is. That's what store credit is, right? And this is where we start to understand this tiering system. Now, I can't reveal the tiering system, not because I'm holding anything back. Anybody that knows me knows I hold zero back. I give it all, but it changes all the time, right? Quill used to be a tier 1 starter vendor. Now they're like a tier 3 starter vendor. Why? Because their underwriting requirements change all the time, right? So it used to be that you could get it right from the beginning. Now they want you to have accounts on your business credit report so they fall down the tiers. So we have a data team that this is all they do. Their full-time job is to verify all of the sources in our software. And our software helps people build business credit by telling you where you are right now, what you qualify for. And then when you add more accounts, it opens it up. It says, now you qualify for all this, all this. It's automatically showing you what you can qualify for based on where you are in the business credit building process. If you don't have access to that, by the way, it's very cheap, even if you're doing it on your own. We've got products and services that will work for you there. But if you want to tackle this on your own, you're going to have to do a little research. You're going to have to use AI. You're going to have to use FICO forums. You're going to have to look through trainings like this to be able to find how many accounts that you need on your business credit reports to get a certain type of account, or you're just going to have to apply and find out. If you apply and you get denied for Lowe's and you get approved for Home Depot, great. Add some more accounts. Then go back and apply for Lowe's again. Okay. Regardless, the key here is to add accounts to our business credit reports. When we add about 8 accounts, now we can get the fleet credit. So fleet credit gets us Visa card, or fleet credit gets us gas and fuel cards at every major fuel station in the country. And when we have about 14 accounts on our business credit reports, now we get to the final stage of business credit building. And this is when auto financing becomes available. So we have clients that get hundreds of thousands of dollars in auto financing. One of our clients the other day got $350,000 approved at Ford. No personal guarantee, no credit check. They're a partner of ours that sells business credit as a service. They took the finance manager and they signed him up as a client. It's one of the best parts of the story. But $350,000. They went in to get one vehicle, got approved. The finance manager didn't even think they could get approved without providing their social. They did, $350,000. And then they opened up an entire Turo business because that wasn't even their goal. But hey, if you have $350,000 worth of credit, why not? That's the purpose of business credit. Even one account, one approval could actually make or break your entire business, the same as it did here. Somebody's trying to figure out what to do, goes out and gets some credit for their vehicle, gets $350,000 credit line. Now they put all these vehicles on the road, have a full-blown Turo business, and now they're making multiple 6 figures, even into 7 figures, right? So this is where we get auto financing without a guaranteed credit check. This is also where we get that universal credit, the Visa cards, the MasterCards. Now, how do we do this without it being linked to us personally? Well, things have changed a little bit. Back 7 years ago, in June of 2018, the government came down with a requirement that any bank, and I'm going to show you why I'm actually stressing bank, any bank that opens an account for you must verify your identity. And here's the problem. If I get a credit card at Staples, Staples is not issuing the credit card. It's actually underwritten by Citibank. So since Citibank is opening up a credit card for us, then they have to verify that the business has an owner. And so they're going to ask for our social security number to verify that we are the owner, to verify our identity. But you never, ever, ever want to provide your social on an application if they don't specify that it's only being used for identity purposes. If that's not specified, do not provide your social. If I'm going to fill out a Staples credit card app and it asks for my social, and it says and it does not say to me that it's only being used for identity purposes, then what I'm going to do in that scenario is I'm going to call Staples and apply. And I'm going to tell them, I do not authorize a personal guarantee. I do not authorize a personal credit check. I want this approval to be on my business only. So remember, it's okay to apply online at their special specific links. And if you don't have them, you have to do a little bit of digging. Our software gives you the direct link, but if you don't have it, then go and say, hey, Staples corporate credit card, where's the link? And then when you apply, if it does not stipulate that it is only for verification purposes, do not provide your social. Call them to actually get approved instead. That is how we get away from it actually being linked to our social. So how long does this process take? And by the way, Tuffy says, hey, I'm a nonprofit organization. What do I need to do for credit? Same things we're talking about here, Tuffy. Everything we're walking out right here works for a for-profit or a nonprofit company. Don't get me wrong. When it comes to getting financing, loans and credit lines, being a nonprofit is harder to do than a for-profit. But if you're building business credit, you can get it for a nonprofit. You can get it for a for-profit company. Doesn't make a difference. So keep in mind at this stage, let's talk about timeline. It should take you 1 week to get your fundability and your lendability and your credibility all established, right? 1 week. Then after that, in that 1 week, you should be applying for new vendor credit, those starter vendors. Now, at this point, you're going to get the credit, use the credit, pay the bill. In about 2 to 4 weeks, those accounts are going to show on your business credit reports. That's when you start getting revolving net 30 type of retail credit. So 30 days into this process, if you're doing it correctly, you should be getting retail credit. From there, every time you get credit, use credit, pay the bill, every 30 days, it will then update your business credit reports. So this means ultimately, if every time you get to a new tier of credit, you're getting credit, using credit, paying the bill, then 30 days passes, you'll be able to open up another tier of credit and another tier of credit and another tier of credit. So our clients are getting to the end of this process in 4 to 6 months. So they're getting credit week 1 and fundability is set up. Excuse me. Items are reporting on their business credit reports 30 days in. They continue to get credit every 30 days thereafter. And when they're 4 to 6 months in, you're going to have to take some water. Then they are to the end of the process. I noticed everybody stuck around just to see if I would die. I have not died yet. But if you stay to the end, you'll see if that actually holds true for the rest of this live stream. I don't know. It's anybody's guess. That's why we want to tune in. So timeline, right? We can get credit week 1. 30 days, we see our business credit reports established. Every 30 days, we get more tiers of credit, 4 to 6 months. If you're doing it right, you're actually to the end of this process. So tips for my extra fast business credit building. 1, get more accounts than you need. When I told you you need 3 accounts, at 3 to 5 to move to tier 2, I said that for a reason. Because you can get away with 3, but a real pro will get 5. Why? Because some accounts might not report the next month. Maybe the reporting cycle's off. Maybe it's the following month before they report. One account maybe I got has a minimum $50 purchase, and I didn't know that, right? And so now I come in and I only spent $40 and it won't report. So if I got the minimum I need and that minimum doesn't show on my credit report, I just lost a month's worth of time waiting for it to show up. So I always recommend that you get more accounts than you need in any tier. So even if some of them don't report as you think they will, you still have enough accounts reporting to move on to the next tier. Second tip, pay early. We are given a gift of business credit, a gift of business credit scores. Look, the FICO consumer credit score is a freaking nightmare. It's a nightmare. If you really, really understand how the consumer FICO works, as you try to improve one part of the score, you damage another. I'll give you a simple example. Credit mix of your consumer FICO, right? I need to have 1 to 2 mortgages, 1 to 2 auto loans, 3 major credit cards, blah, 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 right? Well, maybe I don't have that. So now I apply and I go and get the car loan. I go and get the mortgage. I go and get the credit cards. Well, the minute I do that, I hurt my utilization and I hurt the inquiry aspect of my score. So in an attempt to improve my credit mix, I damaged my scores because I added inquiries and put balances on my credit. Well, that's how the FICO score works. In the business world, our scores are primarily driven by one factor and one factor alone. How do we pay our bills? All we need to do to get good scores is get accounts that report and pay them on time or early. And the higher our score is reflects how early we pay our bills. If I have an 80 paydex score with D&B, I'm paying my bills as agreed. If I have 100 paydex with D&B, then they're expecting my payment to come well before it's due. So I want to pay my bill as early as I absolutely can, because that is what is going to give me higher scores, and my scores are going to give me my better interest rates. So the better my business credit scores, the better my interest rates. So I want to pay those bills on time or early. The next thing is that you never want to stop building business credit. You want to continuously build business credit. A lot of people say, how often should I use the accounts? You got to use it once every 12 months for it to calculate into your business credit scores. I find it's very good practice to use those accounts once every 6 months. Here's why. Because your business credit reports show the recent amount of credit that you have used. So if I go 3-4 months without using that account, then it doesn't show on my business credit report, and credit issuers know that I'm not using the credit that's being issued to me. Keep in mind, credit issuers want to see a business credit report with a lot of accounts. They want to see we're using these accounts, that we're paying them on as agreed. If they see a lot of accounts and very few of them are being used, that credit issuer is less inclined to issue us credit, because there's a real risk that they'll give us credit and we won't use it. They want to see we're using the credit. So you really should be using the credit every 6 months or less. That's going to help us continue to make sure that we are getting more approvals. Now, if we want higher approval amounts, we need to really get credits we're going to use to get credit we're going to use to grow our business, and we need to use that credit. Okay, because again, the bureaus show the recent amount of credit we've used. So if I have 10 accounts and every one of them shows I've used less than $100, I'm not going to get a $30,000 approval. It's not going to happen. But if I go back to my John Deere example, if I get a $30,000 credit line with John Deere, and this month I went and bought a new tractor for $2,500, well, that's good, because now credit issuers see I'm using $2,000, $3,000, $4,000 on that account in a month, and that will help me get $5,000, $10,000 approvals from future credit issuers. So find the credit accounts you really need to use to grow your business and use those. Stop using personal credit cards. Stop putting it all on an Amex card. The most important thing you should do is be spreading out your spending across as many cards as you can get. Now, we don't do that. Why? Because we're lazy. I mean, let's be honest. It's just convenient to use the same credit card for everything we do. We usually take our highest limit account, Amex, and we use it for every single thing we're doing. But here's the problem with that. Then I'm not spreading out my spending. I only have one account on my business credit reports that shows it's being used. But if I spread it out and I buy office supplies and I go to Staples, and then I need to buy furniture and I go to IKEA, and then I needed computers and I go to Dell. I mean, I love this new curved, like massive monitors. I'm going to buy one of those things. I'm obsessed with them, right? So maybe I go to Best Buy to buy that, right? My daughter and I go to Best Buy just to check stuff out. We just like to go play with all the electronics to see what's going on. Don't ever take your teenage kid to Best Buy. It's very expensive. It was a horrible idea on my part. So do not take that as a suggestion. I'm telling you, it's bad. Unless you have a $30,000 corporate credit card with Best Buy, then it's fine. But you absolutely can have if you're following these steps. So make sure that you're spreading your spending out. Don't get $50K at Best Buy and go buy all your stuff from Best Buy. I want to go buy some stuff from Best Buy, but then I also want to go get credit at Apple and use my credit there. Now, can I buy an iPhone at Best Buy? Yeah, but I'm not going to. I'm going to go buy it from AT&T. Why? Because now I have credit with AT&T. Then I'm going to go buy my iPad from Apple. Now I've got credit I used at Apple. Now I'm going to go buy my monitors from Best Buy. And now I've got credit I've used at Best Buy. Now I've got 3 accounts showing that I'm using them. So spread your spending out. The more accounts we're using, the better our business credit's going to be. The more credit and financing is going to come available for us. So if you need help along the way, we've got a step-by-step guide. It's 100% free to get. This thing's been downloaded over 1 million times. Over 1 million times this has been downloaded. I mean, you will not find any other step-by-step playbook of building business credit that is as popular as this one is. I mean, we've had this thing for 10 years and constantly refine it and improve it. It has more vendors, more details on the steps of building business credit. Scan this QR code to go to creditsuite.com/EIN to make sure that you grab it. And TCD says, hey, 3D Biz ask, can 2 companies share the same address, brick and mortar, but everything else is different to build business credit. I love this, TCD. I'm going to throw this up as a comment. I want to actually address this. So what TCD says, hey, can two companies use the same address? So here's how business credit profiles are assigned. 3 different ways. There's 3 different factors, I should say. First, we're looking at the business name. We're looking at the NAICS code or the industry code, and then we're actually looking at the address. So what DMB does to be able to recognize that this business deserves a separate credit profile is this business has a separate name, a separate NAICS, and a separate address. So if you have 2 businesses at the same location, that's fine. They share one of those 3 factors, an address. Now, if you start to get 2 businesses in the same address that have a similar name or are in the same industry, problematic, right? So 2 businesses can absolutely be in the same location. That's fine. The problem you run into is if you have a business at the same location with similar names or the same NAICS code. That's when the bureaus can get tripped up and they can start reporting information that's not yours on your business credit report. TCD, fantastic question. Thank you very much for asking. And Raw Naked Truth says, from the bottom of my heart, I say thank you for having this $1 million of information for free on YouTube. I just came across your channel on yesterday. Immediately with those nuggets in place. I appreciate that. And thank you very much for Raw Naked Truth. And make sure you go to creditsuite.com and just take a minute at the top of our page. Follow us on TikTok, on Instagram, on all the social channels. And I have my own little private experimental. It's small. It's like less than 1,000 people in my actual TikTok following. And it's at Business Credit on TikTok. I mean, hey, I got at Business Credit when TikTok wasn't even a thing, right? So make sure you check us out there as well. So I'm going to go ahead and wrap up. Make sure you grab our free guide on building business credit at creditsuite.com/EIN. If you miss this training, any part of it, you can watch it in its entirety on the platform you're watching, LinkedIn, YouTube, or Facebook, by going back to that platform and restarting the video. And I look forward to helping you succeed. So if you're not already, smash the like button and subscribe on our social channels. All we talk about is getting money for your business. We deal with over 100 different funding programs, over 1,000 different lenders, and we are the most proficient established company in the country that builds business credit. We're even teamed up with DNB and help them with their education, amongst many other things. So make sure you grab our free guide at creditsuite.com/EIN, smash the like button and subscribe, and then keep your eye out for our next training where we talk about more cool ways to get the money